Stimulus efforts from President Biden already getting some pushback from Republicans. Higher taxes, are they on the horizon? You've got vaccine issues as well. That's sort of the backdrop, gang, of what we're looking at right now. When I look at the notes today, Degas, market frothy, prepared for a pullback. Shannon, pullback. Jenny, pullback, needs to be a pause. Jim Lebenthal, market's overbought, expecting a correction any day now. Steve Weiss, though, you're staying long. You're bucking this trend a little bit, huh?
Well, I don't know that I'm bucking a trend. I've been consistently saying that a 5 or 10% pullback wouldn't bother me. But what am I going to do? Sell stocks where you have huge gains because I think a pullback's coming? My advice is focus on your stocks, ignore the markets, stay with fundamentally sound companies, and you'll be fine. Let's just go through some of the alleged headwinds that you mentioned. Tax increases, they're going to hurt the economy. They're going to hurt the market. It's a fraud. That's not true. Look at the tax increases since 1950. The market's gone up in every single year except when there was also a long rate rise in 71. Biden, now he's not going to get anything done. Now they're pushing back from the GOP. What was it in November? November was, we like a Congress that's at a stalemate. That's when markets do best. So you can take all this information, these isolated viewpoints, and say, oh, this is terrible. Forget strategists. They don't make you money. They sit in the fence. If this happens, then that'll happen. Just stay long quality stocks. You want to trade around them? If they go too far up, shave a little. If they go too far down, add some. But that should be your playbook. Nobody's ever seen this before. The old pages don't make any sense in this environment. So, yes, I'm staying long.
Okay. Jim Lebenthal, you heard it from Weiss. You think the market's overbought. You're ready for a correction, as you say it, any day now.
I'm going to stick with that. Steve, you sound a little angry, but I'm going to be a little calmer than that. And I'm going to say
at you, Jim.
That you're never angry at me. But look, I've sold some stocks recently, Caterpillar and Winnebago. With those proceeds, I've looked at the environment and I've asked myself, do I want to buy either the market or individual stocks right now? And the answer is no. I want to just be patient and sit. Now, when we talk about froth or toppiness, here are some of the things I look at. Margin debt is going higher. Equity inflows are really picking up into mutual funds and ETFs. Sentiment surveys are turning very bullish, not just a little bullish, very bullish. These are all signs of a market top. That doesn't mean we're going to have a crash. You've got to, on the other side, look at the power of the Federal Reserve. Look at fiscal stimulus, which is coming and increasing, and look at the vaccines and say to yourself, if you're me with about 12% of cash, if I see the markets pull back a good 9%, I'm not going to wait any longer than that. That's kind of the maximum drawdown that I'm looking at here. So I'm not predicting calamity. I just look at the sentiment indicators. And let me give you one key example here, okay? You can go on TikTok and find 20-something-year-olds working from home telling us how to trade stocks, or Lindsay Lohan telling us to buy Bitcoin. And I got to tell you, it reminds me of a century ago, Joe Kennedy saying, I got out of the market when my shoeshine kid was telling me stock tips. I see a little bit of that right now. So I'm just going to be patient.
Maybe, Shannon, it's just best to look at the big picture, right? Stop trying to figure out, okay, market seems overbought. Market seems frothy, and just focus on what Rick Rieder told us yesterday of managing trillions of dollars for BlackRock. Let's listen to Mr. Rieder. We can talk about it on the other side. It's good context for this conversation.
I think you could still get an 8 to 12% return in equities, but I think the tail risk is higher. But like I say, not to say you can't pull back first, but I think the tail risk is we're going to have higher returns in equities. Like we've had last couple of years. When you had incredible monetary stimulus, probably not. But I still think there's upside.
All right, Shan, pretty optimistic view from Mr. Rieder.
Well, I think this is all about the probability of these different events occurring, right? We're talking about the probability that the market will go higher versus on a longer term basis rather than going lower on a longer term basis. The likelihood that the yield curve will continue to steepen versus flatten over the course of the next year. And I think that when you put it in that big picture perspective, you can't overstate the importance of some of the additional transparency that's coming into the market now. We know that vaccine dissemination is not going well. We know that we don't have all of the data on the new variants of COVID-19 that the CDC is looking into. We're going to get more transparency, and that may actually create some additional consternation or concern in the market. But in the end, that doesn't change the narrative for the back half of the year, which is, the tailwinds that Jim started talking about, the Federal Reserve, some of this fiscal spend. I don't know exactly how much fiscal spend we're going to get. I don't know what that's going to look like, but it's going to be positive for the economy. And so when you think about this nearer term pullback, does it feel frothy? Sure does, based on current valuations. But there's a story here. There's improving earnings. There's improving economic data that's on the horizon. This next 6 to 8 weeks, we saw it in Europe this morning. We're going to get disappointing economic data. You have to think about the longer term and making sure that you like what you own for the second half of this year.